What's up, traders? Let's lock in on what's setting up for Thursday, April 17th. It's shaping up to be a technical market day, with a couple of macro undercurrents that could bring momentum, especially on the dollar pairs. Let's get into it, pair by pair. Euro to US dollar, dollar rebound or euro defense. The euro to US dollar pulled back after stalling out near 1.0695 this week. We saw the pair react to a sticky US CPI print, and although the dollar cooled off a bit yesterday, the broader structure still favors the greenback for now. Key levels to watch: support, 1.0605. A breakdown below this opens the path to 1.0570. Resistance, 1.0695. That's the top from earlier this week. Bullish break only valid on a strong close above. What's the trade? Unless we see a clear break above 1.0695 with volume, I'm leaning towards short setups on rallies, ideally entries between 1.0660 to 1.0680, with tight stops above 1.0710. The euro is showing relative weakness into dollar strength, and unless we get a surprise from the ECB minutes or US data shift sentiment, I'm not buying this bounce. Pound sterling to US dollar, range bound with a slight bearish bias. Cables still stuck between 1.2440 and 1.2570, but it's starting to lean heavy. UK inflation data out Wednesday came in just under expectations, giving the bow a little breathing room. That's a bearish weight on GBP if the dollar holds up. Key levels: support, 1.2440. A daily close below could draw in sellers targeting 1.2380 next. Resistance, 1.2570. Capped the upside twice this week. Needs a strong catalyst to break. The setup: if price pushes into the 1.2540 to 1.2570 range early in the day, I'll be watching for exhaustion to short. If we crack below 1.2440, look for continuation trades, potential intraday entries around 1.2460, stops just above 1.2495, targeting 1.2390. Keep it tight, cable's been whipsawing with US data flow. US dollar to Japanese yen, all eyes on the 155.00 marker. This one's the beast right now. The yen continues to bleed, and 155 is the key psychological and intervention level. The BOJ hasn't stepped in yet, but you can feel the tension building. US yields are still elevated, and as long as that's the case, dips are being bought. Key levels: support, 153.80. Initial line in the sand. Resistance, 155.00. Psychological: a clean break and close above this could light the fuse toward 156.20. The play: I'm not chasing this at 154.80 plus. Instead, I'm watching for a retest of 153.80 to 154.00 as a potential dip buy zone. If we blow through 155.00, we may get a sharp spike, but be cautious. Any comments from Japanese officials could spark a sudden reversal. If you're long, trail stops aggressively past 155.10. Don't get caught in a verbal intervention trap. Economic calendar: what matters on April 17th? U.S. initial jobless claims, 8:30 a.m. Eastern Time. Market will be watching for any softening in labor. If we print over 225K, you might see some profit taking on dollar longs. ECB monetary policy meeting minutes, 7:30 a.m. Eastern Time. This could add some noise to euro pairs. Traders will be looking for any signs of dovish lean toward June. A dovish tilt. That'll feed into euro weakness. Fed speak: Barkin, Bostic, Williams. There's a cluster of Fed speakers through the day. With inflation still sticky, any hawkish tones could re-strengthen the USD, especially in the afternoon session. Sentiment and risk management notes. Risk is tilted toward a stronger dollar narrative, but we're trading into stretched levels. Price action is going to depend heavily on how the market interprets Thursday's data and speeches, not just the numbers themselves. Keep in mind, thin liquidity in yen pairs can cause sharp spikes. ECB minutes may surprise, but won't be a game changer unless they signal something dramatic. The market is looking for excuses to lighten up dollar longs, but hasn't found the right reason yet. Pro tips for April 17th trading. Patience over prediction. Thursday's going to be about execution. Set alerts at your key levels and let price come to you. Don't force trades in chop. Use tight stop structures, especially in yen crosses. US dollar to Japanese yen is frothy. If intervention chatter comes, you'll need to be nimble. Lock in partials at logical targets. Don't hold out for the home run. With central bank minutes and jobs data, the second half of the day may shift tone quickly. Stay news aware. Have your feed running. Things can change fast when multiple Fed members are on deck. Final word, April 17th won't be a fireworks day on the surface, but the ingredients are there for volatility if any one data point or Fed comment surprises. As always, keep it clean, keep it structured, and don't overexpose yourself in front of headline risk. Trade smart. Trade tight. I'll see you on the charts.